Hello, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today we'll be looking at a couple of things. I know markets have been pretty on the line as a result of the current geopolitical war that was heightened over the weekend, especially the attack by Iran on Israel. So markets have reacted quite positively this morning. So we'll be covering that. We'll be looking at the economic calendar, and later on we'll do technical analysis to understand where the markets might be headed next, the prevailing market structures, and hopefully everyone will benefit from this session. So as usual, I'll begin with a disclaimer. This is not investment advice. It's not a recommendation to trade. It's a purely educational session, so you should always do your own due diligence and practice proper risk management. So that being said, I believe it's a good time to start. So let's start with the economic calendar. So from what we are looking at here, it's quite a number of things that will be expected this week. It's not as busy as last week, where we had a couple of central banks making interest rate decisions, but all the more it's important that we go through everything. So as you can see, Monday is usually a quiet day. We don't have much happening. So from business services index in New Zealand, visitor arrivals in New Zealand, core machinery orders, which surprisingly increased by 7.7% in the last month, and of course, producer price index for Switzerland, which increased by 0.1%, lower than the expected 0.2%. So going forward for the day, we'll be looking at European industrial production month over month at 12 p.m. or midday. Then a speech from Monetary Policy Committee member Braden for the UK at 2:15. Canadian housing starts at 3:15. Manufacturing sales and wholesale sales for Canada at 3:30 p.m. And of course, the most important event of the day will be core retail sales and retail sales in the US. And at the same time, we will also be looking at the Empire State Manufacturing Index. So as you all know, retail sales is a measure of the strength of the consumer purchasing power. So when the average US consumer has more money, they can buy more stuff. So when you track the receipts from the major retail shops, you're able to tell when Americans are spending more and when they are spending less. So strength in retail sales is usually positive, especially for equities. It means that companies are selling more, and in that case, you expect the companies to be doing well. So a surprise increase in retail sales would be very positive, especially for US equities, and in this case, we are talking about the Nasdaq, the Dow Jones, as well as the S&P 500. So as for the currency, we know the Fed has been fighting to make sure that inflation is coming down. And according to the last inflation report, inflation was up 3.5% from the 3.2% reported in the previous month. So if retail sales are increasing, it means that the consumers are still purchasing more, meaning that aggregate demand is up. And in that case, it worsens the fight against inflation. And as a result, it means that the Fed may have to hold higher rates higher for longer. So an increase in retail sales is expected to be positive for the dollar. And on the other hand, if there's a decrease in retail sales, then we should be expecting to see a weaker dollar. So going forward for the week, I'll be focusing on the major events. So there will be Chinese industrial production, GDP, and retail sales data on Tuesday early in the morning at 5 a.m. There will be claimant count change or job claims in the UK on 9 a.m. on Tuesday. Then we'll be looking at the Canadian inflation at 3:30 p.m. on Tuesday. Later on, a speech from Bank of England Governor Bailey at 8 p.m. And then a speech from two more Fed governors, the Bank of Canada Governor Macklem at 8:15, and of course, Fed Chair Powell at the same time. So Inflation data from New Zealand will be coming up on Wednesday at 1:45 a.m. Then inflation data from the UK on Wednesday at 9 a.m. So we'll also be looking at the final inflation data for the Eurozone at 12 p.m. on Wednesday. Before we move on to another speech by Bank of England Governor Bailey, as well as European Central Bank President Lagarde at 9 p.m. So later on, we'll be looking at the jobs data from Australia at 4:30 a.m. on Thursday, then unemployment claims as well as Philadelphia Fed Manufacturing Index for the US. Before we focus on three different FOMC member speeches, two from Bauman and one from member Williams. So as we approach the end of the week, the key focus or highlight will be national core CPI or inflation data for Japan, then retail sales report for the UK at 9 a.m. on Friday. So that's a brief summary of what we will be expecting for the week. However, we know that there was a quite disruption happening over last week, where over the past 2 weeks after Israel was allegedly involved in a strike in Iran, Iran's Damascus consulate. Iran vowed to retaliate against Israel, and that environment has been the key theme of the last 2 weeks in the markets. So the expected retaliation was bringing in fear as well as increased risk in the markets. And as a result, investors sought to buy more safe haven assets to make sure that if these situations escalates and maybe there's a full-blown war in the Middle East, then they would have their positions in a secure way. So eventually, Iran managed to strike on Saturday night, leading to Sunday morning. And that strike was on major news everywhere, and investors were very worried because the markets were closed. However, after the strikes happened and Israel managed to neutralize a majority of these events, we saw things changing where Israel did not counterattack or make a decision to counterattack. And as a result, there's de escalation in that sector. So this means that there is a potential that going forward, there will be no further escalation between Iran and Israel. And as a result, what we are seeing is markets now agreeing that there is a potential that there will be peace in the Middle East. And peace in the Middle East basically implies that things might be headed in the right direction. So as a result of the reduction of this risk premium, markets have opened largely positive. So investors are quite positive that there is no risk of escalation of war. And now we are looking at a potential rally in equities. So the biggest thing we have seen today is equities starting on a very strong rally, and we could be seeing this extending for the rest of the week. So let's get started with some technical analysis. And then once we cover that, hopefully we will be able to cover some of the key developments. So from the chart side, this is how it looks like. Dollar index, since the market opened this morning, there hasn't been much of a movement. So this is what we have been experiencing today. Nothing much of an activity. The big surprise this morning is the dollar gaining against the Japanese yen. So this has been the activity since the open of the market. So this strong rally indicates the strength of the dollar against the Japanese yen. And now we expect this to continue because those fears for the weekend are now gone and the prevailing market trends continue. So as we all know, even from the daily chart, this is what we have been experiencing, a huge cup and a handle formation on USD JPY on the daily chart. And then the breakout happened last week, and this week you can see the breakout is continuing. So in this case, I expect to see some further upside happening in USD and pair. So for Euro USD, what we are seeing is that there was a big drop happening over the last week, with the euro continuing to lose ground against the dollar. This was accelerated on Friday, but now we are seeing some form of recovery. So if the euro is in being strong this week, then the potential target is the previous area which was serving as support, now turned into a resistance. So there is a potential that the euro would continue gaining and potentially get to this area of 1.07269. However, on the overall trend, the dollar is still very strong. So we could be seeing the dollar making a comeback and retesting the previous low. So while the market continues to rally, there's still a good chance it will continue with the bearish momentum. So for now, as the dollar index takes some form of weakness, the euro is now making some gains. And it's the same for the pound. So after the big drop that happened last week, now the market is moving higher. I believe this is the area that was last serving as the support. So now we expect the price to be moving much higher. And the target is somewhere around 1.25192. So moving on to New Zealand USD, it's also a similar kind of formation, a big sell-off happening last week, and now the market is attempting to make a recovery. So if we get some form of recovery where the New Zealand dollar strengthens, then this might be a nice target around 0.59658. But overall, the dollar is still strong, especially considering the big inflation number, which means interest rates might have to stay higher for longer. So the overall idea is that after the strong recovery bounce from these areas, the market eventually continues the original direction. So this is the big momentum, continuation of the big momentum. So after some pullback, similar with what happened here, market moves back and then continues with another leg. So I expect something similar for these major pairs. So for the pound, after getting to one of those areas, then potentially continuing the same trend because rates may have to stay higher for longer. And this is across the US, and rates are significantly high in the US compared to these other economies. So for yen, rates are really low at 0.1%. So there's still a good chance that the market continues moving higher unless the Bank of Japan finally decides to intervene, and that intervention hasn't happened yet. So from what we are looking at here, you'll notice that this was some form of consolidation on Thursday and Friday, and then the breakout. So the leg could be much higher than the current level. So gold made a surprise comeback after forming a new all-time high. So 2430 was the new all-time high last week. So if you look at the price action on Friday, a big rally followed by a big sell-off towards the end of the day. And then today we had a slight gap upwards, market closed the gap and then has been trading sideways. But then, as we know, the current prevailing market trend for gold has been bullish, and any form of pullback has been taken as a positive area to go for bullish positions. So now that we have a pullback in our hands, it makes more sense to start looking for more bullish positions. So for now, you can see what happened on last day. We had a nice bounce, a breakout of this trend line, a rally, a pullback, and now another potential rally. So the next target is still 2,430. So I expect price to now start recovering and moving back towards the previous all-time high. Since nothing has changed fundamentally, central banks are still buying gold at record levels, and equities are increasingly becoming risky. So as a result, we should continue seeing more upward trajectory in gold prices. So US equities have managed to make some good bounce since the open of the market this morning. So for the Dow, I expect something similar. The last high that we saw was somewhere around here. So with the market now pricing out the equities risk from the expected war, now we are seeing the US 30 or the Dow Jones making a rally, and this rally could extend to 38,561, which was the previous high on Friday. So for the Nasdaq, a really strong bounce. So you can see a coincidence of this area, which was serving as support, in the trend line here. So potentially the Nasdaq could rally to 18,209. So there's still more room for upside for Nasdaq for the day. And of course, for the S&P 500, it has broken above these previous lows. So now the real target becomes the previous high. So somewhere along this area or along the highs that we saw on Friday last week. So 51.94 seems like a likely target for the day. And I believe now that the markets have reduced that premium, the risk on mode is back, and we could be seeing the S&P 500 get back to 5,194. So Brent oil has taken a big hit this morning. So it's down about 0.5% since open. So you can see the big drop here. In fact, 0.73%. And the drop started happening somewhere on the afternoon of Friday. So Brent is still very solid, and this area has remained significant as a key level support for Brent oil traders. So now that the market has made this drop, there's a good chance that buyers could come in and now attempt to drive prices higher. So we have seen it happen before. So if I remove all this, you notice the same idea playing out. So now from this area here, we could be seeing a bounce and Brent oil continuing the rally towards the upper side. But then one of the key factors that was making Brent rally was the potential disruption of supply in the Middle East as a result of the potential war. But now that the situation has de-escalated, if that risk premium is removed, then we should be seeing much weaker Brent oil prices. However, looking at demand and supply factors, you notice that OPEC is still holding its policy of reducing supply. So in this case, there's also the potential that Brent oil eventually breaks this area and goes for $87 per barrel rather than bouncing towards $91.5 per barrel. So in this case, I would be very interested in what happens in the next 1 or 2 hours, whether there will be a straight up break and the market continues down, or whether there is a nice bounce and the market heads higher. So it's a wait and see kind of scenario, which I would be very much interested to see how it plays out in the next couple of hours. So as for Bitcoin, we have seen quite a positive response after the big sell-off over the weekend, where it dropped to around $60,000 per Bitcoin, made a pretty strong bounce over the weekend. So you can see the price action on Sunday was largely sideways. But then today being Monday, the market made a strong bounce, tried pulling sideways, and then ended the Tokyo session having made at least 4% gain. So here we have 3.7%. So we were up 4%. But now as we enter the London session, since the situation has de-escalated, then we should expect to see some further upside momentum. Of course, if you're looking for a nice target for a short-term entry, then it might make sense to think of this resistance area here as a nice point to target. So the price could potentially lead here, and this is a price level of around $70,000 per Bitcoin. So looking at Euro 50 cash index, we have seen a pretty strong rally, and I believe it's time to adjust the trend line here. So this rally is now headed to this trend line and could potentially break headed higher, as now the Europeans are no longer pricing in a war. So the markets have opened pretty strong with a very good momentum. So the short-term immediate target is just simply here on this trend line. And now we observe whether there will be a break or not. So it's the same thing for the French 40 index, a very strong rally beginning with a gap. And now that we are getting here, we could potentially see a rally extending from this area here. And of course, if you look at the FTSE 100 index, I will try and remove all the noise here. You'd notice that it's the one that is less bullish. So majority of these other indices have made some pretty good run. So this has been the overall momentum. And from the lower side, I would say the momentum has been following a path along here. So it's more of a sideways momentum for a couple of weeks. But then today's bullishness across all equity markets means that we should expect to see some further upside despite the current momentum where we have seen the market rejecting higher prices, pulling back, but is still bullish in my books. So the Chinese equity indices, beginning with the Hang Seng Index, also opened pretty strongly today. So after bouncing from a major support area, so we can see the green candlestick with a hammer. So after this area, you can see the market bounced strongly and is moving higher. So for the rest of the day, expect the Hang Seng Index to continue moving up towards the upper trend line. So this is the target area, 16,991. So for the China A50 index, it's a similar story. We had a very strong bullish momentum, basically reversing the price action of the last 5 days. So whatever happened in the sell-off in the last 5 days have just been recovered in about 2 hours. So this is evidence of bullish momentum. Of course, we expect this to extend to the previous high. So in this case, I would be more interested with a strong momentum towards 12,393. So then for Japan's Nikkei 25 index, we're also seeing the same level of bullishness. So last time we didn't get this potential break we were looking for. But now after the big drop, notice that the market was unable to form a lower low. So in this case, indicating a weakness in this bearish momentum and now a potential rally towards the previous high. But before we get to this area, for now, we focus on this area moving to that $9,804 per share. So it will be a nice rally for the Nikkei 225 index. So it seems more likely that there will be more activity in equity indices recovering from last week's sell-off compared to other conventional assets we've been trading. So looking at the Nikkei, looking at the China A50 index, which is the most bullish for the day, then it means that these are the areas that will likely have the best opportunities for the day. So that's it for the day. Brent oil seems likely to present a nice opportunity in the next 1 or 2 hours. So US equities currently on a strong rally. So I would be counting on them to bring in some good volatility for the day. Gold is still sluggish for the day. It's not presenting the best of opportunities to make an entry. So it's still more of a sideways momentum, but eventually could be seeing some activity, maybe in the New York session. So the dollar is pretty weak. It's losing to the Canadian dollar. It's losing to the Swiss franc. It's losing to the New Zealand dollar. So it's also losing to the pound as well as the euro and only gaining against the yen. So for the day, I would be betting on a much weaker dollar. And of course, for the UK 100 index, it seems more likely that it might be ranging for the day. So I'll be looking more on the Asian as well as European equities, save for the FTSE 100 index. So now that we have covered that, I would like to see if there's any questions or comments. So hello, Trapskid, Manthi, Manabaston. Thank you guys for joining and happy new week. Hello, Tony Dark. Hello, Faith Kagendo, Waridi. Promising pairs this week. I think oil is a very interesting pair this week. So that's a really good question. So oil is something that could potentially make a big move right from this decision point. So that's one of the things to consider. USD is very interesting considering what we have been seeing. So from the daily chart, I showed you this cup and a handle formation. The breakout happened last week and today continuation. So pretty bullish on USD, but you have to use very tight stops just in case the Bank of Japan or the Ministry of Finance of Japan decides to intervene. So for now, it seems more likely that the bullish momentum will continue. So remember, we are seeing a dollar index that is weak. It's weaker against the euro. It's weaker against the pound. It's weaker against the New Zealand dollar as well as the Swiss franc, but it's still gaining against the yen, which signals that the yen could be extremely weak. So this could be a nice rally to ride for the week. So on the other hand, gold making a recovery towards the previous high of 2430 is still a potential move. So I would be very observant on this pair. But also from the 4-hour chart, there was some pretty big sell-off last week. So the sell-off could also be continuing. So in this case, I wouldn't be at all having any strong opinions. So I'll try and remove all these objects. So the big sell-off here from the daily time frame, this is how it looks like. So remember the last time we had something similar, gold continued to project and moved further downwards. So if this is anything to go by, then we should be seeing gold making some further steps backwards. So also remember, part of the big move last week was people preparing for some form of war between Iran and US and Israel. But now, since that didn't happen, then that risk premium is being removed. So we could be seeing the market drop into this area. And this is around 23.21. So around 23.21 price level is a key level support that the market may be headed for as we look forward towards the rest of the week. So high oil and gold, I believe we have already covered that for the day. So high roofers, I'm looking at a question from Patrick Wangari. How responsive is gold to technicals, things like candlestick patterns and key areas, or does it obey the fundamentals more? So gold is the one asset that tends to work as a safe haven asset. So whenever there's fear or uncertainty in the markets, we tend to see gold reacting more. However, from a technical analysis perspective, it always forms several patterns. So the several patterns help you identify potential entry and exit opportunities. So we have been covering these time and time again. So for instance, when there's nothing much happening in the markets, you can easily identify a pattern such as this one. So this is a technical pattern, and when the market makes the breakout, it's so easy to identify and trade. So gold makes these patterns every now and then, and when the breakouts happen, you're able to ride the wave. So yes, gold responds to fundamentals, but then the technicals are also as important as well. So I wouldn't ignore either side of trading gold. So as for Brent oil, I mentioned that there's a premium that was being priced in for a potential war, but now that premium doesn't exist because the what we saw happening over the weekend, there's no retaliation, and now we have seen the sell-off happen at the beginning of the week. But now we are at a key level support, and now there's a good chance that oil will proceed with the prevailing trend, which has been pretty bullish for the better part of the year. So since the 7th of December last year, all we have been seeing is bullish momentum. And now in this range meaning the sideways momentum in oil prices, since around the 3rd of April, now we are seeing these areas are very important support area and these as resistance. So if the market manages to break this area straight up, we go for $87.0 per barrel. But then from what we are seeing, and I'm hoping in the next 2 hours it will be clear, if there's a nice bounce, then the target will bring us back to $91.5 per barrel. So that's it for the day. Thank you very much, everyone. So remember, we have a new episode of the Bullish Banter podcast. We have a new episode of the Financially Incorrect podcast. And of course, if you'd like to open a trading account, you should find the links below. And in addition to this, if you are just a beginner and you're trying to learn how to trade, make sure to go to the FX Pesa channel. Look for the Novice to Pro series. It's a series that is designed to help you transition from a beginner trader to a pro level trader. So thank you, everyone. Remember to like and share the video. I appreciate your time. I hope to see you on the next session. My next session will be right after tomorrow's snapshot, which will be at 4 p.m. going through the New York Open on Tuesday. So thank you, guys. See you then.